A lot of stuff playing on the mind of the market. There's a big US, kind of a melt up which is happening, especially in technology stocks. Ukraine-Russia build up also on the border. There is budget round the corner and good earnings as far as Indian market go. Third quarter earnings largely have been good, and they are also kind of baked in. So kind of a corrective phase which is on in the market. Let's take the discussion forward with Mr. Sanjiv joining us from BOB Capital Market. Sanjiv, thanks very much for your time. Let's get your thoughts on the table on your analysis on the global factors, or basically the factors which are terrifying the market right now and because of which we are in a corrective phase.
Thanks, Ajay. I think you beautifully summarized now that the global factors are absolutely on the negative side, whether it's the commodity pricing, the oil prices, and of course the Fed. I think now the Fed hike is kind of taken back. The markets have taken into the factor the Fed hike. And that is what possibly is the reason why in the last 3 weeks of January, you would have seen about over 9,000 crores of net FI outflows. I think that's an indication of how the interplays between Indian markets and the global markets. While the global cues are negative, but the Indian domestic growth story remains intact. And that is because we are seeing robust earnings from the corporates. And of course, we will see going forward, there's a time lag when Capex comes in and when the result comes in after 2 quarters. But I believe that the domestic growth story is intact, while the global cues remain a little difficult and tighter.
Right. How are you analyzing this, the trend of the FI DI? FI flows, of course, you spoke heavily on the selling side, but DI flows have been strong, especially the SIP number. And how should retail investors behave in this market? Are there enough reasons to worry? Should they be cautious? Should they be trying to buy the dip in a phased manner? What is your advice?
I think you use the word rightly, dips or not. It's difficult to time the market. And I think the retail investors should understand that this is proper research. That's the reason why we've had Bob Caps provide research to both institutional and retail investors. But the fact is that the SIP inflows of about 11,000 crores per month is not an insignificant amount in the Indian market. And that is what driving liquidity among the DIIs. I'll give you data. I think it was last year 93,000 net inflow from the DIIs versus a 25,000 from the FIs. And this month, where we have seen about 8,800 or 9,000 crores of outflow from the FIs, we have seen a net inflow of 7,200 crores from the DIs. It's a very clear thing that when the money is there for the DIs, they have to invest. So of course, there's partly a liquidity reason, but they're also using cash to prop up. And hence, I would say that domestic investors are very much in sync with the domestic growth story.
Right. Sanjay, talk to us about the sectors which you have researched at your desk very closely, which have got good tailwinds, industry tailwinds, as well as prospects of good earnings growth. Because these are the areas where if the market does provide a good opportunity and the correction should be accumulated.
See, what happens is, Ajaya, you've been, all these news channels do project sectors. Unfortunately, when somebody talks about a sector, it has to be taken with a pinch of salt because let's take it, I'll give you an example. While broadly we are looking at on our house views that the technology sector will look good because of the digital play. The consumer sector will also look good because of the consumer spending. But then, of course, not all the companies in all these sectors do well. So, for example, in consumer, you have to be very careful that the consumer-facing companies, which are using commodity as a huge part of the cost, I think they have to be careful. You know how commodity prices are going up. So barring those companies, and of course, there will be advantages coming in over a period of time. You are seeing volume growth in the consumer companies, but then the pricing power is not being able to take advantage. So over a period of maybe a quarter, 2 quarters, when things are better, and the beauty of today is that at least we are seeing some kind of easing on the COVID restrictions, and that coupled with consumer, spending, which can go up because of government factors. I don't want to name them because I can't talk about it openly. As to whatever the government measures takes of increasing the liquidity of the consumers, and if we are able to see a huge prop up in the consumer spending, then of course this sector will look up very, very good.
Sanjiv, very quickly, a word on the union budget from the market participants' point of view. How do you think the government can go about sending the right message to the investor community and also strike a balance between fiscal prudence and growth impetus, which the economy really requires right now?
I think from a retail investor, people should stop looking budget as a factor where they would buy and identify stocks. Because after the implementation of GST and other stabilizing factors, budget is more now a balance sheet exercise by the government to contain the deficit. And of course, there are policies around the budget which impact industries and corporates. But on a whole, the investors should be very, very careful in analyzing their own specific companies through proper research houses and proper research reports. But from the government side, the expectation is, and it is a requirement of the day, that the Capex cycle has to move faster. And of course, we're going to see the government expenditure in this quarter to be good, but the Capex cycle, not only the government, but it is the corporates who have started now looking at Capex. And that is a very exciting feature. I would say there will be a time lag of maybe 2 quarters, but the Capex cycle, along with the government expenditure and the consumer spending, I think these are 3 key factors which will see the economy and the stock markets possibly in the right space.
Right. All right, Sanjiv, we'll let you go on that one. Thanks so much for joining us on the show today.
Thank you, Ajay. Thank you. Have a nice day.
That was a quick view coming in from BOB Capital Markets. Sanjiv Saraff joining us on the show.